of people think gold is a great asset to hold to store wealth instead of other asset classes. And the reason being is just simply because it's seen as a safe haven, and it has done for forever, right?
Why are central banks aggressively buying gold?
Yeah, any commodity for that matter, a currency, it's just a transfer of wealth, right? So it's just what are you going to hold to store wealth is the question. And that's all it comes down to. So are you going to hold stock? Are you going to hold bonds? Are you going to hold property? Are you going to hold gold or currencies? That is just simply holding wealth, right? And you're predicting that hold that you've got, or whatever it is, asset, is going to go up in value over time. It's as simple as that. So
Welcome back to the Winner's Playbook. Billy here with Steve Sloan. Welcome back, Steve.
Great to be back, Billy. It's been a while, so I get to jump on with you and have a chat.
It has. And so we're talking gold today. So prices just hit an all-time high in US dollars this week, which has a lot of people ask if they should buy some, sell some, or sit tight. We'll try and keep it grounded in this discussion. We'll talk about why it is up, how Aussies can get exposure without making it complicated, and what traps to avoid so you're not chasing headlines. Gold is meant to lower stress, not raise it. So let's make it make sense. Gold pushed above $4,000 an ounce this week with ETFs and central bank demand in the mix, and Aussie dollar prices are sitting near their own highs. So Steve, how are you going, and what's happening for you this week?
What's going on? Mate, lots happening with business at the minute, and investing, and we've got a fast close the end of the year, and just lots of client activity, which is great. And this question about gold comes up quite a bit in these conversations at the minute, because in the last 6 weeks, I think gold has gone up 20% alone in 6 weeks, which is insane. Look, some people would say, yep, surely that's a bubble. Look, who knows, to be frank. And I think the question mark is here is, look, central banks keep buying it. You know, the Chinas and the Indias and the various countries around the world see it as a safe haven, and they keep buying it. And when they keep buying it, that means the price is going to keep going up. So the question mark is what's going to happen in that space now. No one really knows, right? I think as the world is on this trajectory of uncertainty and unknown and Trump and all this sort of stuff, and well, while we've got that uncertainty, I think that's just going to continue. I can't see any downward pressure, on that gold price with the uncertainty going on at the minute.
Yeah, so good summary. So that was sort of the first question here, like, why is the gold price surging? So obviously it's a simple supply and demand thing, right, with central banks buying it up.
Yeah.
So why are central banks aggressively buying gold?
Well, yeah, whether it's gold, a commodity, any commodity for that matter, a currency, it's just a transfer of wealth, right? So it's just what are you going to hold to store wealth is the question. And that's all it comes down to. So are you going to hold stocks? Are you going to hold bonds? Are you going to hold property? Are you going to hold gold or currencies? That is just simply holding wealth, right? And you're predicting that hold that you've got, or whatever it is, asset, is going to go up in value over time. It's as simple as that. So if we break it down to that simplicity, because that's all it is, it's that simple, it's then what asset classes out of all of those is going to go better over the next couple of years with everything going on. And so people are trying to predict over the next 2, 5, 10 years, what's the best asset to hold for the future. Clearly, a lot of people think gold is a great asset to hold to store wealth at the minute instead of other asset classes. And the reason being is just simply because it's seen as a safe haven, and it has done for forever, right? I think you and I have been around quite a while, but way back, it's seen as a safe haven. So it's as simple as that. So as I said, that uncertainty is not going to change. It is probably getting to the point though now where if you look at the gold price, spot price of the charts, you sort of go, well, while it is probably, we would never say not to invest because dollar cost averaging and all that type of jazz, it generally pays off. But if you look at a price that's gone from X to Y, and it's a curve that goes nearly vertical over the last 6 months. It's look, the word bubble, I hate to use it, but it's sort of starting to look a little bit scary.
It's looking a bit bubbly.
It's really bubbly.
I pulled up a chart, a gold price chart that goes back to 1860.
Right.
And it was fascinating because essentially it seems to be almost on the dot every 30 years. There's this crazy bull market in gold, and then inevitably it blows up. The price crashes, and then it goes nowhere for 20 to 30 years again.
Right. Yeah.
So I think that's probably what's missing with a lot of people getting caught up in the hype at the moment. Not to say it won't keep going on this run, because there's good reasons for it, right? Like we've got high inflation.
Yeah.
The way, there's also like this global shift away from the US dollar, particularly by like the countries you mentioned, like China, Russia, India. Yeah. And that all that capital's got to go somewhere. So a lot of it's feeding into gold at the moment. So maybe that'll keep going, but certainly historically, gold certainly doesn't gradually rise like the way, so the stock market, the property market might do.
Yeah. Yeah, you're right. Look, while you've got all those countries and central banks buying it to store wealth, you're not, I don't think it's not really going to have that bubble effect like a tech crash, right? Like it's because it's got value. It's seen as a safe haven. If it did come down 15%, you'd probably get a stack loads of people trying to rush in to buy it again. So realistically, it's not going to, I don't think it's going to have that crash effect that other asset classes can have, especially the share market. But yeah, you're right. Look, it's probably time to be a little bit careful with it and just play it by ear. But there's plenty of other commodities you can buy as well. So that's just one metal. There's plenty of them. So if you do your research, there's plenty of options out there. But yeah, look, that thing about the US treasuries and currency, clearly, I think over the next 10 years, you're going to see more countries want to steer away from that one asset class as governing the whole world, right? Like clearly there's countries like China and Russia, and they don't want to, they want to see other options on the table, right? So I think in general, I think you'll probably see a sway of capital buying gold for that reason, to get away from that US Treasury situation. And so that's also going to hold it up. Right, because as you just said, if we look at the superannuation system today, it's over $4 trillion or something.
It's crazy.
All this money's got to go somewhere. They can't just sit in cash. They're running out of options, right? So the money's got to go somewhere. They've got to buy stuff. Like you don't get an asset manager sitting there going, "I'll just stick it in cash today." No, that's not their job. Best option. That's not their job too. They get fired, right? Because we can do that. I can sit there and earn $1 million a year and stick it in cash. So they've got to stick it somewhere, and this is the issue with not just gold but all asset classes in general. Share market's the same issue, right? We've got an inflated share market because people keep pumping this money into it, i.e., index funds and all these funds that just have to allocate capital to a particular bunch of stocks. CBA, prime example, in Australia, and it just inflates the prices crazy because they keep buying it because they have to. Right, could be an issue. Same issue with gold.
Yeah, spot on. There's just the amount of inflows, like those big tech stocks in the US, and then in Australia, as you said, it's like Commonwealth Bank. Those share prices run so hard, but asset managers and investors are going, okay, where else can we send all this wave of capital? Yeah, and they seem to hone in on one or two things, and as gold at the moment is hot.
Gold's at the moment, yeah, that's right.
And at some point, everyone will say, like, gold looks too expensive, and then it'll probably be the next thing, right? It might be another commodity or another sector or something like that. Yeah.
100%. So that's the, and look, you and I, on the investment side of the fence at Link, we do a lot of work around this space about where to next, right? Where to next? You can't just go the status quo and go, right, well, that's worked for the last 10, 15 years. It'll work again. It doesn't work like that. You've got to constantly look at, okay, well, that doesn't sort of make sense, right? You got these inflated share prices or gold prices, wherever it is. Is that the smartest move for capital over the next 10, 15 years? We've got to make sure that it is a smart move, and some of these asset prices, maybe not a smart move. And so you've got to look outside that box and where to next. Yes, diversification is key, right? You want to have gold in there. You want to have, you absolutely have some allocation to that. And we'll probably talk about diversification in a minute. But you've got to start thinking about where to next. And clearly, if it's run really hard, well, maybe that's not the best option. and maybe it's other options, and there's unlisted options. As you know, we talk about unlisted companies and all that sort of jazz all the time, and you've got to look outside the box, and that's where experience and knowledge and getting your feet on the ground and understanding markets and understanding research and understanding what options are out there in the world is really important.
Spot on. And went to an interesting session this week. A fund manager it's a high conviction resources fund, so just invest in mining stocks. And this guy was saying today oil is like what gold was in the early 2000s. So in the early 2000s, the whole world was like gold's it's this ancient thing. No one's interested in it. Central banks don't care. Price has gone nowhere for 20 years. As it turns out, that was obviously the perfect time to start buying gold.
Yeah, yeah.
And he reckons oil is that today. I don't know if that's true or not, but it plays right into your point. You got to look at the areas where, like, everyone's looking at gold at the moment. The price has already doubled.
Yeah.
So is that where you're going to be throwing a bunch of money right now? Like, it's not the smartest thing to do.
No, that's right. And it just comes back to the basics of investing, right? Like, it's, be fearful while others are greedy, and greedy while others are fearful, right? It's as simple as that.
Warren Buffett hated gold, didn't he? I can't remember. He didn't like that it wasn't like a business, like it's not a product.
He hates crypto. I'm not sure. Look, he was all about dividends, and you're obviously not going to get a dividend off a lump of gold. You might get off a miner every now and then, potentially, if you're lucky, but not off a lump of gold. So yeah, maybe that's why he didn't like gold. But yeah, look, it's up there. So, but diversification is key, right? And if you've got a long time to invest, you're happy to stick it in your safe and be done with it. There's lots of ways you can buy gold. You can buy direct, so buy a lump of gold. There's plenty of gold bullion traders out there. You buy gold off. There's ETFs, exchange traded funds that you can buy that are backed by gold. There's mining companies that just mine gold, and if you want to go, that's a bit high risk, but you can do that as well. So there's plenty of options you can do if you're looking to get into gold and you got a couple of grand or $5,000 or whatever. I'd probably suggest just going an ETF backed by gold, to be honest. But some people want to hold the actual physical gold. That's fine too. But just make sure you got somewhere to put it.
That's it. Yeah, it's just storage, and this idea of hoarding gold for this apocalypse doesn't really you got to keep it secure, right? Like someone can just come and take your gold.
So that's right.
Maybe an ETF's a good place to start.
Yeah, and if you're super worried, just buy 3 different ETFs, right? Like, if you de-risk it if that way, and you've got to put it somewhere, and if you're worried about it, just spread your risk around a couple of options.
I saw a stat recently that at the moment there is a huge gap between the gold price and the value of gold mining stocks. So like companies that mine gold potentially still cheap. So that's a way. It's a bit riskier, as you say, but that's a way to get like exposure to the gold price.
Yeah.
But if you get it right, you can do pretty well.
You can, but geez, picking the right mining stock is a really, really hard job. And I don't think people realize how expensive it is to get commodities, any commodity, out of the ground and into production. It is unbelievably expensive to get extraction of gold or any metals for that matter out of the ground and into a shop, right? And a company who's doing that makes one wrong decision, blows our company up. So really, really hard to get that right. Hence why the big miners are so big, because they've worked that out and they have the scale to do it. But the small miners who, some of them are quite small that mine golds, it's super expensive.
Yeah, and some of those gold mines are in sketchy sort of parts of the planet, aren't they? Who've got risks with government coming in and shut it down or whatever.
Yeah, that's right. Yeah, there's lots of sovereign risk, lots of legislation risk, lots of risk around this, people making wrong decisions as a management of the company. Yeah.
Yeah. So do you think, for people listening, do you think they should be adding gold to the portfolio?
I think so. Look, I'm not saying definitely don't. I think it's always, if you're in it for the long game, buying bits of gold across a long period of time, it's completely fine. Completely fine. Just don't go all in on one slab of gold. But absolutely, I think it's a good asset class, and it's clearly been over many, many, many years a very good place to store wealth. You may not get huge returns on it over the next period of time, but it's a great place to store wealth if you want to just invest in an asset class that's outside the normal asset classes, right? So I've got personally some, and I think it's a good asset class to hold, as long as you have other asset classes, i.e. property, shares, metals, funds, cash, and the like.
So what's an appropriate allocation then, percentage terms?
That's a very good question, Billy. I mean, you guys with that question. Look, at it all comes down to, you know what my answer is going to be, and it just comes down to your own personal position and what your appetite is and where you are in life, and do you need liquidity? Obviously, if you need liquidity, gold's not for you. It's not. You can't go spend it. Can't go to your corner shop and buy a lollipop with a slab of gold. So, look, it's all about where you're at with life. But if you just want to store wealth in an asset class that had to go up over time, hopefully go up over time, I should say, because who knows? Then absolutely, that's fine. Yeah, but allocation wise, look, I think the general rule is anything like that shouldn't be over 5% of the portfolio, right? Like, whether it's crypto or gold or those you call vanilla, I suppose, or different types of asset classes that don't have a good can lock up liquidity quite hard. Like, you can't, if something happened and you couldn't sell it quickly, that's an asset class you've got to be very careful with, because if you can't sell quick, you're sort of stuck, right? So crypto, for instance, gold, metals, whatever, it's very easy for those asset classes to lock up, and you may not be able to sell quick or sell at a price you think is suitable. Like, you can generally always sell something, but depends if you're willing to take a 50% haircut. Well, it's different. So you just got to be a little bit careful with property. Generally, sure, it might fluctuate a couple of percent up and down, but you can sell it. Not liquid, but you can sell it. Shares you can sell within a day. These funds or ETFs you sell within 3 days, the like. So anything illiquid like gold, you've got to be a little bit careful. So you're probably capping it at 5%.
Yeah, that's it. I mean, in terms of a managed portfolio, I think it's spot on. I talk to clients, obviously we both do, about these sorts of things, about Bitcoin and gold and other types of investments. And sometimes it's just, as you say, personal preference. Like, there's what's optimal from, like, if we're managing $1 million for a client, we'll have whatever we believe is an optimal exposure to each underlying asset. But if that client has a strong view that they are concerned where the world's going and they think gold's going to be an awesome asset to hold, I'll just say to them, well, go buy some gold. Like, I'm not going to tell you not to.
No, that's right.
But when the money I'm managing, we're going to have whatever we think is optimal at that given time. So you can have your personal view, but that's sort of separate, in my opinion, to, like, if you're investing a sum of money.
Yeah, totally. And then it comes down to education, right? Our job is to educate. So then you sit there with a client, educate them on what can happen, what are the risks, what are the downsides, etc. And as long as you walk through that process, and at the end of that conversation, you've educated them, they're well aware of the risks, they're well aware of what can happen. That's your job. But then if they're still comfortable with that, by all means, fine, let's go.
That's fine. Yeah. Look at that chart that goes back to 1860, and you sort of see what can happen.
That's right. Yeah, totally.
So in a year's time, we might sit here and it's doubled again. But so things can change quickly.
And one thing you and I both know is no one really knows.
No one knows.
No one knows. Currency, no one knows. Gold, no one knows. Stocks, you just got to go long term, because no one really knows anything in terms of the short term hits or short term ups and downs. You just got to understand, be educated, know your stuff, and make smart moves.
Agreed. And so if someone's listening, like, if they already own gold, are there any smart rules for, like, when to rebalance or take profit or anything like that?
Oh, look, without giving advice, because we're not here to give any advice, it's all general in nature. Clearly with it, if you held gold for the last 5 years and it is where it is today, and you needed the money, it's probably a smart time to maybe liquidate some, right? Potentially, because it's run so hard, you're on a massive win. You could easily take that out and go to something else. How long's a piece of string is the question, right? Because if you don't need the money, well, you'd probably retain a lot of it, because it's over long term it's going to go up. But clearly when you in any asset class, if it's run that hard, the likelihood is it might be a good time to sell.
Spot on. And there's a concept that sometimes people don't think about enough, which is the concept of opportunity cost. Like, as we've discussed, you can have a 20-year period where the gold price just is stagnant. So like, what else could you have allocated your money to over that 20-year period? Like, you're sitting there waiting for a doomsday scenario, but in the meantime, you've missed out on other opportunities, i.e. stock markets, property, businesses. So gold is really quite different to those other things because it's not a business. You're not analyzing it. It doesn't pay dividends. There's no profits involved. It's just literally a piece of metal. So
yeah. It's quite funny. It's like just a piece of metal sitting in a box, right? Yeah. Look, absolutely. Asset allocation across asset classes has to vary over your investment career. You can't just sit on one thing and think that that's going to work forever. You're going to do yourself in if that's the case. Yeah, sure, you still go up in value, but you're not allocating correctly based on what's happening. And that doesn't mean you need to make real minute moves like individual stocks. It just means be a bit thematic and tactical with it, right? If gold's gone up a shitload, well, maybe it's time to allocate to somewhere else. Just 101 of investing, right? Like, it's sure, the argument may say, well, gold could continue to go up. Yep, granted. But if it's run that hard, do you think it's really going to go up that much again? And if your answer is no, probably not, well, maybe it's time to allocate that capital somewhere else. Like we've had a property market here in Melbourne that hasn't moved for 5 years. So you think maybe we might start seeing some growth, right? That would make sense. So you might want to say, right, maybe allocate some capital into that market. You don't need to make harsh or quick moves. You make just smart, thoughtful moves with your money.
I've had the exact same conversation on Commonwealth Bank shares. Because it's easy to say, well, look how well it's done. Yes, okay. So that's history. That's already happened. Where are we now?
Yeah.
This is the most expensive bank in the world.
Doesn't make sense.
So if you had 100 grand in cash now, would you buy Commonwealth Bank shares, the most expensive bank in the world, or would you buy something else?
You would absolutely not buy CBA shares.
Yeah. We're not saying it's a well-run bank. The profits, it's growing its profits slowly. That's fine. But you just need to look at today rather than saying, but it's done this. And everyone gets caught in that trap, right? You look at gold and you get FOMO. You're like, it's run from $1,000 to $4,000. I need to get on this. At some point, there will be a peak at some point. We don't know where that is.
Yeah, 100%. 100%. So that's you've just summed it up really well, Billy. Well done.
All right. Any final words there? I think we've covered all bases on gold, I reckon.
No, I think just get diversified. It's still a good asset class. Definitely buying stuff over long periods of time works well. It obviously has for many, many, many years. But just be a bit careful with it. It's a good asset, but just now's the time to just be a little bit careful with gold, given the size of the price.
Agreed. Thanks, Steve. Good to have you back on the podcast, and see you next week.
Good to be back, mate. See you then. Bye.
Bye.
Disclaimer. The information contained in this podcast is general in nature and does not take into account your personal circumstances. Please head to the show notes if you wish to book in a free 15-minute call to discuss your personal situation.